Layer ones are still a huge narrative going into this bull market. And in this video, I'm going to show you proof that that's true. I'm going to explain what an L1 is. And I'm going to show you guys the only L3s that I'm buying, at least as of right now. I'm still researching more. The only 3 that I'm buying right now for maximum gains in a risk-adjusted way, okay? So before we get started, I do have to say none of this is financial advice. These are my own perspectives, my own research, and my own opinions, and they should be treated as such. Always do your own research, okay? Just use this channel as a starting point. So to start, what is a L1 and why are they so important, okay? A layer 1 is exactly what it sounds. It's the first layer when you think about the tech stack of blockchain technology and applications. You need a layer 1, then you have wallets and decentralized exchanges and other applications that come on top. But you have to have that base layer first, that foundation, okay? If you look at the internet, this is just like TCP/IP, okay? You have TCP/IP, and on top of that, we were able to create internet browsers and then apps, and anything that we do online, anything would not be able to get done without TCP/IP. TCP/IP is the layer 1 for the internet, and Ethereum, the Solanas, the layer 1s in crypto are like the TCP/IP for blockchain. We don't know which ones are going to win out yet. Just like back in the day, you had TCP/IP, you had Linux. A lot of people think Linux was the most superior tech, but TCP/IP won out because it had a lot of money behind it. So we don't know which blockchains are going to win out. We kind of just have to do our research and place our bets intelligently based off of the data that we have right now. Layer 1s are also platforms, right? And if you look at TradFi, you can see that platforms historically are the best investment because, again, it's what everything's built on top of. Amazon is the top e-commerce platform, right? Imagine investing into Amazon when it IPO'd. You have a lot of money right now if you help. Facebook is the top marketing platform. Same with Facebook, investing into it day one. Google, the top search engine platform, right? And even if you look at Apple, Apple has the App Store, which is also a platform where people can build on top of, and it created a whole economy. It strengthened their networking effects. The list goes on and on. And this is why layer 1s have been the best investments in crypto as well, excluding Bitcoin. I mean, Bitcoin is technically a layer 1, but it's just that it's meant to be a store of value. You can't really build complex smart contracts on top of Bitcoin as easy. You have a lot of people working on Bitcoin and DeFi, but that's beside the point. That's a video for another day. So let me show you guys proof that L1s are still a major narrative going into this bull market. All right, so here we are on Velo, and you can see sector performance. So right now we're looking at the 1 week chart, and you can see under AI, the top narrative by far is L1s. We have AI at 10%. We have DeFi, L2s. I made videos on L2s. I think L2s are going to rise just because I think a lot of the building is going to happen on L2s just because it's more scalable, faster transactions, cheaper transactions. But it all starts with the L1. Okay, so now that we know what an L1 is, let's go through the 3 L1s that I'm buying. I'm going to give you a price prediction for this cycle. Tell you a little bit about, when I plan on getting out and in, and just all of my thoughts behind it. So the first L1, you probably guessed it, is Ethereum, okay? Ethereum is the granddaddy of smart contracts, right? It was basically built to compensate for the weaknesses in Bitcoin, aka hosting smart contracts. Vitalik actually tried to get people to build Bitcoin like ETH, and when they didn't, they went and built ETH, right? So let's go through a couple metrics as to why I'm bullish on ETH. Price predictions, TA, all that stuff. So the first thing is we have an Ethereum ETF along with the Bitcoin ETF as well, which only helps Ethereum. Like the crypto is becoming more legit. Institutions like crypto. And if we look at the ETH ETF data for September, normally September is one of the worst months for crypto, but this September was not half bad at all. You can see that on the 26th, we had a lot of inflows for the ETH ETF. A lot of people pulling out of Grayscale just because the fees are so high, but you can see inflows starting to increase. So we like that. If we want to see institutional adoption, this is where it's going to come from. This is how we're going to see all-time highs get hit. In addition to that, we had a successful merge to ETH 2.0. So Ethereum is now a proof of stake blockchain, which also attracts institutions because it's kind of being looked at as the risk-free rate in crypto. The risk-free rate in TradFi is just buying corporate bonds. You know that you can bank on the money because it's coming from the government. It's kind of the same thing with ETH. If you stake your ETH, you can pretty much bank on getting a reliable yield because of how many people use it and just all the things that we're talking about here, right? In addition to that, you had EIP 1559 be implemented last year, which incorporated a base fee, so you have Ethereum being burned on each transaction. And the good thing about it is right now we have 651K being burned, right? The supply growth is only 0.25%. So you create a situation to where the activity on Ethereum is going to pick up so much, it's going to mean that more fees are being burned, and it can actually make Ethereum a deflationary asset because you can create a situation to where more ETH is being burned than coming onto the market in the form of staking rewards. Because ETH doesn't have a capped supply, but I like a deflationary asset because that just means the price is going to go up. And then if we look on DeFi Llama, you can see that out of all the TVL, which is total value locked in DeFi, Ethereum has 55.9% compared to all the other chains. Its next biggest competitor is Tron, but it's behind all around 7x, right? 7 times 7 is 49. 7.92 billion, 49 billion, right? So it has way more protocols, over 1,000 protocols. It's the only chain with over 1,000 protocols on it, right? And growing. A lot of different addresses, and you can see that over the past month, the TVL has been increasing on the 1 day, the 7 day, and the 1 month. I expect this to continue as we go deeper into the bull market. And if we look at Ethereum from a technical analysis point of view, you can see that it's been respecting this trend line since around June of 2022. Came back down and retested it, double retested it. But what I want to see is I want to see this orange line get on top of this blue line. ETH is my largest holding in my portfolio, but I'm going to be buying a lot more once this orange line gets over this blue line, because as you can see historically, anytime the orange line is on top, we've been in bullish market conditions. Even if you just trade the crosses, like you would save yourself a lot of losses. When it crossed here in the 200, they got on top. You see what happened after that. You see the orange get on top again. We rallied, right? Orange is on top and it crossed. Look what happened. Boom. So I think we'll see a $7,000 to $15,000 ETH this cycle. And $7,000 is going to be my first level as to when I'm going to start taking profits. Okay, so we talked about ETH. What is the next L1 that I'm buying? The next L1 that I'm buying is Near Protocol. Okay, so let me go through the reasons why. First off, I live here in San Francisco. Got ETHSF coming up here in a few weeks. I'm excited to go to it. If you come into ETHSF, drop a comment down here below. Let's meet up. Let's chat. Let's have lunch. Let's chat some crypto. But anyways, Near Protocol is pretty much started here. I go to a lot of their parties. I know a lot of the devs. I met some of the founders. You know, I talked to them deeply about the technicals and their roadmap, and I like what they're doing. Here's another thing that a lot of people don't know about Near Protocol. It was built by some of the best programmers in the world. Like, they had code breakers, people who won coding competitions built this chain. And they supposedly host some of the most complex smart contracts in all of crypto. And it would make sense why, based off of who built it. But aside from all that, the biggest reason why I'm really bullish on Near this cycle, I'm not sure if it'll be around in the next 5, 10, 20 years, but I do believe wholeheartedly that it can make you some great returns this cycle, is because not only does it fit within the layer 1 narrative, it also fits within the AI narrative, which other than layer 1s, like before this past week, has been the largest narrative behind depin, real world assets, and I think layer 2s. Let's look at some data. So going back to Velo sector performance, if we go over here and hit 1 month, you can see that behind meme coins for the past month, AI has been the top performing trend with over 60%. Like I said, it's right above memes. And then after that, you have L2s, DeFi, and L1. So it's crazy how layer 1s just kind of crept up on everyone in the past week or so. And we've been seeing a lot of layer 1s pump. But you have AI and the layer 1 narrative as gas for Near Protocol to pump. And I really like that. So you're probably thinking, how the hell does Near Protocol fit within the AI narrative? Well, a lot of people don't know this, but Near actually started as an AI company. Like when they first started, they were doing data labeling for crowdsourcing. So let's kind of go through how they incorporate AI within their chain. The first thing is they have great scalability for AI-driven dApps. So AI applications, especially those that handle like large amounts of data, which is mostly all of them. Fun fact, when it comes to GPU power, ChatGPT uses 100 times more GPU power than Google, okay? So they can handle large amounts of data. They require high performance infrastructure. And Near Protocol's sharding technology, which they call Nightshade, It ensures that the network can scale efficiently while keeping transaction costs low. It is a proof of stake blockchain as well, so that helps. And this scalability is actually really crucial for enabling AI-driven dApps that might process vast amounts of data, execute real-time analytics, or run machine learning algorithms. The second thing is they have interoperability for AI systems. They allow them to all connect. So AI systems thrive in ecosystems where data and services can be integrated seamlessly. And Near's interoperability features could allow AI applications to interact with DeFi, NFTs, and other blockchain ecosystems. And AI models could even be trained and deployed across various blockchains and allow them to interact with a wide array of data sources and services. Like the more data it can have to interact with and act from, the better the AI will be. So then you have AI and smart contracts. So Near actually enables the creation of smart contracts that can execute AI models or processes on chain. And this actually opens up more possibilities for automated decision making in dApps, such as predictive models or recommendation systems, with transparency and reduced trust in centralized entities. So for example, AI could be embedded within smart contracts to actually provide real-time responses based on market conditions or any other input. And lastly, and this is really key, is development friendly for AI engineers, right? There was a saying, I think I saw it on the Bankless podcast, where the founder of Arbitrum was talking. He was like, if you want to get 1 billion users, you got to get 100,000 developers, because the users are going to build what the devs built. So if you don't have a chain that's favorable to devs, they're not going to build anything, so it won't be anything for retail to use. So Near is focused on developer experience through tools like the Near SDKs and JavaScript-based smart contract programming makes it way easier for AI engineers to create dApps. This approach reduces the barrier to entry for developers familiar with AI technologies who may not have had the expertise in blockchain development. So they don't have to go and learn all of this new stuff, which cuts the time and alleviates discouragement. Now, if you look at the Near price action, this is a great breakout trade. And I actually told our group about this a few days ago, right around this candle, when it broke out. And if you guys want to get access to high quality trade setups, the best yield farming course in the world is 13 hours, and we show you how to generate passive income so you can have more liquidity to buy high quality assets such as these at good times, such as this one. Professional coaches who do this for a living, and a great community of advanced farmers and investors. Click the link in the description, book a free strategy session. You'll talk to me or one of our coaches, and we'll ultimately see if our program is a good fit for you. I digress here. But you can see that Near's been in this channel since May of 2024, right? It's going down here, goes back, touches up here. But you can see that it's pretty much been below our 62 EMA since it broke here, right? And like I said, I want to see the 62 on top of the 200, and it looks like that's slowly happening. It's ticking back up. But the important thing is here, we had this trend line, and it broke out of our trend line, and it broke out of the 62 at the same time. So the first entry was this breakout. The second entry is going to be when it comes back down and retests, and I see a nice green candle close on the weekly, right? Not just print, but close. And I want to see it close above the 62, this trend line, and this key level of support and resistance here. If we look back, you can see how much price action respected this level. And the third entry is going to be when we get a break and retest above the 200-day, right? And I like to enter with 20 to 30% of my capital in each trade. So if I have $100 to invest, $25 on the first entry, 25 on the second, 25 on the third ish. You know what I mean? Last cycle, we saw Near get all the way up to $20. I wouldn't be surprised if this cycle we saw double that, but I'm going to be taking profits at significant support and resistance levels. So my first take profit level is going to be around $8.50. Probably going to take profits at around $13 and then at around 18. And after that, just taking profits at big even levels. Very high quality breakout trade setup right here. Doesn't get any more textbook than that. All right, guys, last but not least, the third L1 that I'm buying this cycle. You guys heard me talk about it a lot before, and that is Radix. A lot of people have been asking me, are you selling Radix? Are you still holding it? Still holding it, and I'm still buying it. So Radix has a couple of good things going for them other than the price action, other than the TVL. Like I always like to say, in the short term, the market's a voting machine. In the long term, it's a weighing machine. Radix has their programming language that makes it very easy for devs. It's more efficient right? And it's safer. I made many videos on Radix. Just scroll through the channel and watch it. So I'm not going to dive into that. But one thing that I'm really looking forward to is when they finish the Stargate integration. So Stargate is one of the top bridges that allows you to bridge from different EVM chains, Ethereum virtual machine compatible chains. And EVM just means that the coding that you can do on Ethereum also works on these chains as well. Radix is going to be the first non-EVM compatible chain that can integrate there. Right now, it's like an island where you have this sketchy little bridge. It's the only way to get over there and you can't get back. Once the Stargate integration is done, all the EVM chains that we all know and love with these high TVLs is going to be able to connect to Radix seamlessly. Because right now you can only bridge 15K or something like that and you have to do this stupid KYC on the, I think it's called the InstaBridge. So that's why it's not a lot of people doing things on Radix right now. Also, if we go on their Twitter, you can see they've been at a lot of events. A lot of developers are excited to use it. They've been speaking at conferences and things like that. So they got their head down working. And they've been testing their blockchain. It's a few videos on the Radix Twitter. This one was retweeted. But they were able to do 1.4 million transactions per second during a test with 30 billion transactions processed so far. Just to give you guys an idea, Visa can do like 65,000 transactions per second. And we need to increase that TPS without compromising the security if blockchains are ever going to do mainstream. And I think Radix has a really good chance to do that. I think they have like the best tech when it comes to a layer 1. Ethereum is great, but the Solidity programming language is not the best, and that's why developers spend 10% of the time building, the rest of the time getting their code audited, and we're still seeing these crazy hacks, right? So I really think Radix can sneak up on folks here. And if we look at their price action, it's not looking good right now, but I'm willing to take this risk because if you just zoom out, you can see that other than this flash crash here, Radix is at all-time lows. You can't go too much lower than this, hopefully. But you can see we've been in this trend. So I want to see a breakout. This is what I want to see. Just like we saw on the near chart, I want to see a break. That'll be the first entry, even though I'm already in. But I have some dry powder on the sidelines. I want to see a retest. Sometimes you don't get the retest, though. Sometimes it just breaks out. And I want to see us break through this level, right? And start to turn this into support again. Because this has been like a really strong level of support. So we can regain this support. We get this 62 on top of the blue. I think that'd be a really good situation. Like right here in March, we saw it go to 8 cents. From current prices, just to get to 8 cents, that's a 300% return. Easy 3x, and it would still be fairly cheap, relatively speaking. So with that, I'd like to conclude this video. Guys, what L1s are y'all buying out here? Let me know. Which ones y'all want me to research? Which ones you guys want me to talk about, make a video on, do TA, yield farming videos, whatever the case is. I'm trying to learn about the best ones so I can give you guys the best alpha so we can make the most money this cycle, all right? So if you got value access, drop a comment, drop a like, subscribe, share with a friend. Other than that, I thank you guys so much for tuning in. I love every single one of you watching, and I will see you in the next video. Take care and trade safe.